Hi, this is Christopher Gibson, and here's my annual report for Amazon in 2021. The industry classification for Amazon in the sector is consumer cyclical, industry is internet retail, and Amazon is an online retailer and web service provider that also offers home delivery and shipping, cloud web hosting, as well as other internet related services. The company provides all kinds of consumer products and services through its online and physical forms. Some of the most well-known platforms include Amazon.com, Amazon Prime, Amazon Prime Video, and Amazon Gaming. They also manufacture electronic devices such as the Kindle, Fire TV, Alexa, and Echo. Their CEO currently is Andy Jass, and Jeff Bezos right now is the chairman of the board of directors. The country in which the company operates are Australia, Austria, Brazil, Canada, China, Czech Republic, Egypt, France, Germany, India, Italy, Japan, Mexico, Netherlands, Poland, Singapore, Spain, United Arab Emirates, and the United Kingdom and Ireland. In 2021, they generated $469.882 billion in revenues. They're traded on the NASDAQ exchange, and their 52-week low was $147.60. 52-week high was $186.57. And here's the overview of the annual report. Andy Jass first mentions that this is his first time writing the annual shareholder letter as CEO of Amazon. He then addresses how AWS helped millions of companies adjust to the difficult circumstances brought on by the pandemic, and that saw revenue growth of 37% in 2021. He also saw customer growth of 29% over the last 2 years, despite the difficulties of the pandemic, inflation, and fuel shortages. He then talks about some of the inventions and innovations of Amazon. Their fulfillment network saw large growth and improvement in fulfilling millions of Amazon Prime deliveries. They developed their latest chips for AWS, the Graviton 3, which had a 25% improvement in price performance. Amazon is also continuing to improve their electronic devices like the Kindle, Fire TV, Alexa, Ring, Blink, and Astro. They also announced that their Amazon Prime Video service will be exclusively streaming Thursday Night Football and a Lord of the Rings series in 2022. The letters then concluded with their new leadership principles: strive to be Earth's best employer, and success and scale bring broad responsibility. The chief principal financial officer is Brian T. Olofsky, and the management has assessed the effectiveness of Amazon's internal control over financial reporting based on the criteria established in Internal Control Integrated Framework 2013, issued by the Committee of Sponsoring Organizations of the Treadway Commission to prevent fraud and errors. And the audit company of the board of directors of Amazon.com is the they assist the board of director to maintain free and open communication with the company's internal and independent auditors and management. And their independent public accountant or auditor is from Ernst & Young LLP, an independent registered public accounting firm. The independent auditor is responsible for expressing an opinion on the company's financial statements, performing procedures to assess the risk of material misstatement of the consolidated financial statements, evaluating the accounting principles used, estimates made by management, and the overall presentation of the consolidated financial statements. In their opinion, the consolidated financial statements present fairly in all material respects the financial position of the company. Okay. And that's their accounting equation for this year and last year, and their current ratio for this year is 1.14. Last year is a 1.05. And what the current ratio does is it measures a company's ability to pay short-term debts that are due within 1 year. And their current ratio has improved by 0.09 over the past year. Okay, on the left is their common size analysis of the balance sheet. From the data collected, you can see the most significant investment is in property and equipment net. The company is primarily financed with debt because their liabilities are higher than their stockholders' equity. But this debt is primarily short term. Accounts payable takes up the largest percent at over 18%. And property and equipment went up almost 3%, and long term debt almost 2%. Most accounts stayed relatively the same, though. Cash and cash equivalents went down 4.5%, and accounts payable almost 4%. No significant changes in any other accounts. And as far as short term debt goes, they were able to lower their total current liabilities by over 5.5%. Their long term debt has increased. They're borrowing about 3% more than last year. And for the income statement, here are some ratios. Their gross profit rate for this year was 42%, 39.6% for last year, and 2 years ago was 41%. Rate of operating expenses to sales was 94.7% this year. Last year, 94.1%, and 2 years ago, 94.8%. And the profit margin for this year was 7.1%, 5.5% for last year, and 2 years ago was 4.1%. And their return on assets this year is 9%. Last year was 7.8%, and 2 years ago was 6%. And here's the common size analysis of their income statement. And from the data collected, revenue is increasing. It has jumped significantly over the last 2 years by over 67%. Gross profit started at 41% in 2019, but dropped by 1.4% in 2020 and went back to 41% in 2021. The ratio of total operating expenses saw little significant changes over the 3-year period. And fulfillment expenses saw a steady increase in cost over the 3-year period. It gradually rose from 14.34% to almost 16%. Interest income saw a significant decline from 0.3% to 0.1%. And other income expense net rose significantly from 0.07% to 3.11%. And the operating income percentage dropped by almost 1%, but net income percentage jumped 2.12% over the 3-year period. The decrease in the operating margin shows that costs are rising. However, net income is also increasing, so there is a positive trend showing. The biggest setbacks for Amazon are in 2020. You can see a negative effect across almost all accounts. This is most likely in relation to difficulties faced during the COVID-19 shutdown. And in 2021, the company was able to bounce back and increase its net income. Okay, and here's some information on the current assets. The amount of the accounts receivable right now is $32,891 in millions. And the gross counts of receivable would be 33,891 in millions, and last year was 26,042 in millions. And the net accounts receivable for this year was 32,891 in millions, and last year was 24,542 in millions. And this year's amount for allowance for doubtful accounts is $1 billion. Last year is $1.5 billion. And for inventory and cost of goods sold, their amount of inventory was $32,640 in millions, and last year was $24,542 in millions. And for cost of goods sold, this year was $272,344 in millions. Last year was $233,307 in millions, and 2 years ago was $165,536 million. And the company uses the FIFO method for inventory costing. And Amazon said they may incur additional charges if they reduce their supplier commitments for certain electronic device components. Okay, here's some ratios on the current assets. Their receivables turnable, 16.4. Average collection period 22.3 days. Inventory turnover 9.8. And average days in inventories held is 37.2. And on the right shows you what the different ratios provide. And the industry average for receivables turnable is about 14.54. Amazon's ratio is 16.4, which is ahead of most companies in the industry. And since Amazon's turnover ratio is 9.8, while the industry average is 16.95, Amazon is doing better than most companies in its industry when it comes to inventory management. Okay, for their depreciation method, they use the straight line over the useful life of assets, and the amount of depreciation expense for the year was 34,296 in millions. Last year was 25,251 in millions. They do have intangible assets like copyrights, market research, branding, and designing systems and processes. And their amount of goodwill is 15,371 in millions. Okay, here's some ratios on their long-lived assets. Their average useful life of their plant assets is 6.01 years. Their average age of plant assets is 2.3 years. Asset turnover is 1.27 current year, 1.41 for the year before that, and the year before that was 1.45. Return on assets is 0.09 for this year, 0.078 for last year, and 0.06 for 2 years ago. And below this, it tells you what the different ratios help to show. And then if your depreciation is too high, it can cause a negative cash flow. If the depreciation is low enough, the cash flow will be good. And since the average useful life of Amazon's plant assets is 6.01 years, and the average age of plant asset is 2.3 years, Amazon can expect about 3.71 more years out of use of its assets. And they spent $58,154 in millions on capital expenditures this year. Last year was 59,611 in millions. And Amazon's capital expenditure ratio is 0.8, which is not good because it shows that it may not be capable of reinvesting in their own growth. Next, we'll talk about their liabilities. Current liabilities this year were 142,266 in millions. Last year was 126,385 in millions. And for long-term liabilities, this year it is 140,000 and 138,800 in millions, 101,406 in millions for last year. And their commitment and contingent liabilities include non-cancelable financial obligations for fulfillment, and data center facilities, as well as long-term agreements to acquire licensed digital media content. They also have payments for rent and tenant improvements and accrued tax contingencies. In May 2021, Amazon made an agreement to acquire MGM Holding Incorporated, including its debt. They expect to fund this acquisition with cash on hand. Here are some ratios for the liabilities. The current ratio is 1.14. Last year was 1.05. Quick ratio is 0.49. Last year was 0.72. And debt to total assets ratio is 0.67. Last year was 0.71. So their current ratio improved by 0.09, which shows it's more able to pay short-term debt with current assets. However, their ability to quickly pay off debt with liquid assets has decreased by 0.23. Debt to assets ratio has decreased, which is good, showing it relies less on creditors to finance their assets. Now to talk about the stockholders' equity. They have 532 million shares have been issued, and 509 million shares are outstanding. Number is different because outstanding shares do not count the shares bought back by the company. And yes, they've authorized about 500 shares at 0.01 par value. And any other reported on stock equity accounts would be treasury stock in and accumulated other comprehensive income. Okay, here's some ratios for the stockholders' equity. Since they don't pay a dividend, the only one I could calculate was the price earnings ratio, which is $44.73 for 2020, and for this year it's $51.46. Now we'll talk about the statement of cash flows. The ending balance in cash was $36,477 in millions of dollars. And this didn't agree with the ending cash balance. There was a discrepancy from restricted cash, cash equivalents, and marketable securities, which caused the difference. Net cash was outflow of $58,154 in millions of dollars from investing activities. Property, plant, and equipment, and purchases of marketable securities were the largest flow activities. And their net cash inflow for financing activities was an inflow of $6,291 in millions. And the proceeds from long-term debt was the largest cash inflow. And Amazon uses the indirect method by using net income as the base. And their net income for the past 3 years were $33,364 millions, $21,331 millions, and $11,588 in millions of dollars. And the net cash flow from operating activities for the past 3 years was $46,327 in millions of dollars, $66,064 in millions of dollars, and $38514 in millions of dollars. And there was a large difference in accounts receivable, inventories, and other expense. Okay, here's some ratios for the statement of cash flows. You can see their free cash flow in 2021 was at a negative of 969,000 millions, 31,020 in millions in 2020, and in 2019 it was 35825 in millions of dollars. Their current cash debt coverage ratio is 0.34. Their cash debt coverage ratio is 0.18, and their cash return on sales is a 0.10 and a 0.17 for the year before that. It seems that Amazon is significantly less profitable than in previous years. Its free cash flow is down 129% from last year, and its return on sales is down by 59%. After researching Amazon, this company would probably be a safe to invest in, but it may not be as profitable as other options. They also don't give dividends. The new CEO has done a great job at getting the company back on track after the pandemic. And even though their current company stock price may be lower than the price range of the 52-week high, they continue to deliver gains over the long term. Their revenues continue to grow significantly each year, and the calculations also show a positive trend in profits, margins, percentages, and in conclusion, Amazon should only be considered for long-term investments. Thank you.